Hello, active traders, and welcome to Breakout Scans. This is Ken Calhoun, your host, coming at you live straight out of Colorado here. I'm the president and founder of Trade Mastery and the Day Trading University. It's great to see so many of you here for our Breakout Scans preview event, and nice to see a big turnout for that. We've got a lot of ground to cover. Feel free to ask questions. That's what I'm here for. We're going to learn exactly how to scan for and find the strongest breakout charts. As always, all information is for educational or information use only, not making any advice about what to buy, sell, or hold. By watching this, you agree not to make actual trades. We make no profitability or performance claims. This is all for educational use only. I wanted to start off the night by extending a sincere thank you to all of you for posting your intelligent, smart comments and questions. We had so many to read, and I don't know about y'all, but that's my favorite part of my websites is your folks' voice. Isn't me talking about stuff, it's what's your reaction and how does it all work. So, and what's on your mind, right? It's kind of like a big breakout session at a seminar or workshop where you've got close to 100 comments here, and many more came in tonight. And I have not had time to post those yet, another 20 or so, so I will get those posted by tomorrow. But so many smart questions, and I encourage all of you to take a look at them to familiarize yourselves with what's on everyone else's mind, right? That's the most interesting thing, is respecting what's on your mind. It's not, I'm completely opposed to that guru comes down off the mountain and preaches to the masses approach of teaching and instruction and market positioning and branding. I much prefer to make it a collaborative venture with working together as a team. So y'all are to be commended for and thanked to for making some really smart questions. It's really good, intelligent insights and things that you're looking for. So we will get underway right now with that event. Hey, sure thing. You may, for those of you who are new to working with me, you may have seen me in every month's issue of Stocks and Commodities. I'm a regular columnist there with my Trading on Momentum column. It's very popular, and this month's current issue, I believe we're in Golden Cross Breakouts. So you may have seen me speak on breakouts at the Traders Expos in New York, Dallas, California, usually Las Vegas. Still on the list to go to other destinations as well, but it's been quite the run and exciting to work with the world's best trading outfit, the Money Show folks for the Traders Expos. I highly recommend those if you get a chance to go see. Anyway, let's get underway with Breakout Scans preview event and get on with it. Here are some of the things I'm going to go over tonight as a preview for the premium event that is coming up next Thursday night, or if you're watching this on YouTube video in the future, it will be a recorded downloadable video. So if you're here between February 16th and February 22nd, 2017, you're able to participate in the hour-and-a-half long main event coming up a week from tonight. If you're watching this as a YouTube video in the future, you can order and download the entire event as a downloadable high-resolution video. Let me ask a quick question before we get started. How many of you like the fact that, at least the courses I offer, they're all in high-resolution WMV 1920 by 1080 Blu-ray crystal clear quality video? Unlike a lot of the educators out there that have fuzzy little 600 pixel streaming video that's impossible to see and very frustrating, and they're not even real traders. I'm a real trader with proof I trade, and I like to give you guys high-resolution downloadable videos that you can keep and you can copy to your cell phone or your laptop or your Kindle or whatever, and you can keep those videos as a personal kind of a learning library for as long as you want. So that's something else. You don't have to worry about remembering logins and passwords and watching fuzzy video on someone's website. Instead, once you order my downloadable courses, you can keep the video on a hard drive for the rest of your life, and are encouraged to do so. So, well, thanks. So anyway, let's get underway with tonight's event. Here are some of the things we're going to look at. How to find great breakouts, scanning for breakout entries, planning your scanning, how to set your trade entries, step-by-step scanning signals, and how to avoid false breakouts. And we'll be going over each of those topics in detail in the main event, but I'm going to give you an introduction to each of them using current market charts in the upcoming 25 minutes. And then I'll stick around and answer some questions that you might have about the training as well. But this came out of the survey I did recently. A lot of you are asking for help with scanning, and I think updated scanning strategies for trading rally markets that we're in all-time new rally high markets as we speak are, are called for. So your number one problem, or one of your biggest challenges as a trader, is finding great trade setups and charts. I think you'd all agree with me with that. Well, some of the comments that I read kind of fell into one of these four groups. Many of them were false breakouts, breakout or fake out. Do we have a false breakouts or a continuation run that are actually likely to work out? Breakout or fake out. You can tell I love PowerPoint. I have a love-hate relationship with PowerPoint. I use it because I have to, but I prefer not to. I like to work off real charts. Anyway, breakout or fake out, I'm a trader first, and a presenter second. Anyway, find winners faster, ease of use. One of the things too that I encourage you to think about is with breakout scans, you'll be prepared to use the techniques that I'm about to share with you, both tonight and in detail in the premium event, to evaluate the signal strength. If you're using say a third-party indicator or a scanning service or whatever you're doing, you want to be able to rapidly go through those charts as well as ones you find on your own and find those winning breakout or candidates for good potential winners faster than you're currently doing, because your time's limited. You also need a better way to scan, an improved way to visually scan. I'm a big fan of using price action professional candlestick and Western technical breakout patterns, and we're going to look at many of those in tonight's event. So looking forward to working with you on those. Finding your charts, setting your entries, and managing your exits is kind of what it all boils down to. And to do that without costly BS proprietary made up black box indicators, but instead to be able to do it yourself. So for those of you who share my passion of do it yourself, roll up your sleeves, that's kind of it for the PowerPoints. Let's go ahead and get into the meat of tonight's event. So as we take a look not only at the comments, I've got all these monitors, right? So let me start by pulling up the agenda and we'll go through these one at a time. So I want to start off by looking at how to find great breakouts and scanning for breakout entries. And one of the things that as a tool, there's plenty of third-party websites out there that have, recent high breakout charts and all the rest of it. And while that's useful, one of the best tools that as a classic day and swing trader we always use is percent gain and loss list, right? Your percent gainers, and then you filter for those that have good, strong breakout potential like Kate did for us. That was one of my live room calls today too at Trading Open. We were on Kate, pun intended. We're all over Kate. Anyway, bada boom. Got to have some fun with this, right? Anyway, we're on Kate because it gapped up from 20 all the way to 22 and ran up to 22 and a half. The percent gain and loss list is one of your resources. Thanks for the kind words. I just came up with that. Anyway, it's all good. Your leaderboard scan is one of the best places to look at. In classic day trading, that's all we rapidly scan through is percent gain and loss charts in both the New York Stock Exchange and our NASDAQ market with our percent gainers. One of the challenges with this is that it can be a very time-consuming methodology. And so what I'll be teaching you in the premium event is how to sort through this quickly and which charts to pay attention to and which ones to ignore, because that's really important. Because otherwise, you got to click through all these dang charts. And I don't know about you, but I've got a very tight schedule, so I don't like to waste time. I like to get right into it. So let's take a look at characteristics of great breakouts and how to scan for those. One of the very first things that you want to look at is charts that have such a strong sustainable uptrend that it would have been hard to lose money had you traded it. And you can see ESPR is just one chart. This thing has doubled in the last, this is a 15-day chart. This has doubled in the last couple, 3 weeks, right? I had a hammer down here after a sell-off, that's a hammer, and then it broke out above all 3 moving averages, and you had a golden cross right there, and boom, flawless victory. The force is strong with this one. Score 1 for Hufflepuff. We're in the money, ka-ching. Well, what you want to do as a trader, instead of looking just for momentum charts, is figure out a game plan for how to qualify that chart for consideration. And this is something that's new, I haven't mentioned before. I'll go into in detail in the premium event, but one of the characteristics you need to look for is not only my classic acceleration ramps, which is a steady uptrend followed by a sharper 45-degree angle classic breakout trading 101 type thing, but the texture of the longer term chart. By texture, what I mean is there's specific criteria that you've got to know to put it on the radar, to make it, this is the short list. I just came up with this, 45 minutes ago for tonight's event. These are great breakout charts. They're all in play, as my institutional traders, Wall Street guys say they're in play. The charts that institutional volume has started to dry up the supply in, so demand is higher and price goes up, right? This is a mean reversion day trading chart, just like my recent article in Stocks and Commodities, right? You got a breakout, it runs up, pulls back to half the trading range just about exactly, and then resumes the initial uptrend. Okay, well, for a day trade, that was good for us today. For a swing trade, it's also an outstanding chart if it breaks over, say, the whole number resistance up over 21. But putting these kind of charts that are in play and qualifying them for consideration in the first place makes sense. When you're planning your scanning and you're looking for what types of charts to enter, one of the things that I always have taught traders for many years, and then I've been copied by certain other people, I won't mention their name, you have a wide range candle at the right side of a congestion box or a bullish cup pattern, that wide tall candle will often drive supply and lead to a breakout continuation. So visually, one of the core strategies you want to do when you're scanning for breakouts is memorize and internalize at least 3 or 4 of the very best, strongest, consistent breakout charts. I'm one of the industry's top experts in breakout trading. I would say Harry Boxer's the other great go-to guy for breakout trading. We're the top 2 guys that I know of, at least. And anyway, one of the things that all of us who know how to trade have in common is wide ranges, consistency in their chart patterns, good sustainable strength and momentum that's likely to continue to run, and charts that would have been hard to lose money with had you taken a shot at it. That's in marked contrast to the pop and drop penny stocks or cheap stocks, like this. Often like PULM, somebody will be all excited about it because it ran up and then try and do bottom bounce trading and then get stopped out and lose lots of money because they're trading thousands of shares. That would be a really stupid chart to trade. This, on the other hand, would be a really smart chart to trade because it ran up, right? One of the things that I want you to look at when it comes to planning how to scan is evaluate the candlestick strength on the 90-day chart. And that's one thing that I cover in my other training. What I want to add to it in this training is the nuances not only of volume breakouts and using classic moving average breakout continuations, but also I want you to start thinking about, and this is one thing that I've mentioned before and I'll mention again, think about giving preference or priority to charts like this that have a history of, say, 3 or 4 large green candles with increasing volume as a bullish confirmation before taking the trade. That's one of the best preventative, avoiding false breakout potential strategies I've found is look for charts where the signals all line up. If you've got an increase in volume, I had an article in Stocks and Commodities on this. We had a 3-bar increase in volume plus a large tall green candle will often continue on up. That type of chart is a lot more interesting in terms of planning your scanning and step-by-step signals to look for than other charts out there. One of the other things to look at is the ratio. In our current market, what I'm finding is the ratio of green to red in the most recent 5 trading sessions is especially valuable. And I like to only trade in this kind of market charts that have at least 3 or 4 out of 5 of the most recent candles. And that alone is worth being here for. That one I'll give you as a free tip tonight as a thank you. You want to have a minimum of 3 out of 5 recent green candles. So this one does meet that. We have 1, 2, 3, 4, 5 candles. 4 out of 5 of the recent candles are green. So it does make sense, therefore, to look for an entry up at new highs. ESPR, we have 3 out of 5, or I should say 4 out of 5 again. 1, 2, 3, 4, 5. We had 3 out of 5, or 4 out of 5, made for a good new breakout running all the way from 14 to 23, 24. So get a minimum of 3 out of the most recent 4 or 5 candles, has a good breakout pattern. There's more to it than that, but that's the type of thinking that I'll be teaching you about in the premium event coming up in a week. One of the other things to look for, and this is a good writer downer, is what happens after the first breakout. Often you'll find, say, a congestion region or a bullish cup pattern, and it fades off of previous resistance. you get that large green candle, right? And I'm going to teach you specifically how to use that large green candle. That alone, that could have been the name of the event because it's well worth it just to learn that. But the tall green signal candle at the right side of a bullish cup or a congestion box is one strategy that really helps identify new breakouts in progress. What we care about isn't that, though. I mean, that's kind of, it puts it on our radar, but odds are you and I will have missed it, like here, right? It's okay. I saw this chart now. Unless I can jump in a time machine and go back a few days, that doesn't help me trade this initial breakout. What I care about and what you should be vitally concerned with as a trader is what do the institutional money flow traders do after the first breakout? Do they regret their breakout buy decision and then you get the false breakout and it chops back down into the range, kicking and screaming and hollering? Or does it get say a window or a gap up, like this had a little minor window or gap that got new buyers and is therefore a good quality chart to look at up at new highs as well? So those types of kind of if-then conditioning, as I used to teach traders, if this large green candle then gets a subsequent breakout signal, either a large green candle or a gap on a day subsequent to the breakout, then it's worth putting in your watch list. And that's the type of thinking that I want you to start taking into the markets. And by planning your scanning, that is a professional tip. I'm one of the top industry experts in breakout trading. And one of the things that I would encourage you to do is have an intelligent, rules-based, careful approach to trading these breakouts that gives you consistency. One of the patterns that I had noted for all of my readers in technical analysis of stocks and commodities is what I call multiple gaps or multiple windows. You can see that's one of the strongest possible chart patterns. You got a first gap that takes it up out of previous consolidation. So the buyers came in and they kept lifting it on up. But wait, there's more, they said. It led on up to new highs and even a secondary breakout, or second window. I like to, if you think of these as windows, which is the candlestick parlance for that. And again, for more on candles, learn from my colleague Steve Nissen, the only guy you should be learning candles from, because he knows better than anyone in the world about how to trade candlesticks. Everyone else copied Steve Nissen. He's the original. Anyway, I look at this, I'm very loyal to people who actually help traders, and Steve is aces in my book. Anyway, look at this like it's a window, and I look at it like a window that a lot of Benjamins or cash is coming in. So whenever you get a gap up, it will usually continue on up. And so I look at it like a window that's been opened and a bunch of money came in for me, right? Which is good. And then happened again up here. A nice little window got cracked and we got a nice big green signal candle and it ran up 61 to 63. You're by and large not going to find this kind of a strong chart if you're doing, say, cheap charts or penny stocks or crap instruments. You need to trade consistent instruments. And even though I get it that you can get more leverage and you can buy 1,000 shares of crap for a lot less than 100 shares of quality, crap is crap. It's like buying you can buy a lot of lottery tickets for $1 each. That doesn't mean it's worth anything, okay? So if you're into the lottery tickets, and penny stocks and cheap stocks are the way to go. But if you want to actually be a professional trader, you got to play with the big boys and trade charts like this. And this is also good for those of you who are directional options traders, because I'll be teaching you the very best breakout scanning strategies that you can use to set up your options trades. So if you're calls and your puts and you're looking for directional options plays, or the price zone that it's likely to stay within if it continues on up, where's the strike price, where's the valuation, and the rest of it, you can use what I'll be teaching if you're an options trader as well. Again, this is another good example of that same pattern where you've got multiple windows or gaps. I'll be teaching you how to scan for which ones are gap and trap or gap and crap versus gap continuations. Now, you may have read my industry articles or money show appearances where I say 10% is kind of a good cutoff threshold. That's very true, but there's more to it than that. And I'll be teaching you updated breakout combination plays with gap trading as well in the upcoming premium event. Let's see, how to avoid false breakouts. Well, doing what I'm telling you with the best, strongest charts is the best preventative measure that I have found, at least in my own real money trades. I've traded millions of dollars worth of stocks and ETFs with P&L proof on my Trading Talk forum. I'm actually proved that I trade. Well, one of the things, what a novel idea. Anyway, I won't beat up on all the vendors out there who don't even prove they trade, because people got tired of hearing me say that. So message heard. But the point is, as a breakout trader, you need to have a small group or a kind of a go-to it's like this is go time, and we're going to take the hill, and we're going to figure out which way to flank the enemy. And I got a lot of buddies in the military. I live here in Colorado Springs. Anyway, as a trader, what you're looking to do is flank those charts or trade those charts that are most likely to continue up after you get in. See, it's not so much buying new highs. Anybody with an eyeball can do that. The trick is, and I'm an expert breakout trader, one of the things I found in so many tens of thousands of trade is it's buying at an inflection point that is not only going to keep you out of a false breakout, which is kind of the step in at number one. Sometimes you're the pigeon, other times you're the statue, right? That's just an old Wall Street saying. As a trader, what you got to do is get in and, first of all, avoid false breakouts. But that's not it. That's half the story, or a third of the story. The next third is you got to buy at a price point that's likely to attract new buyers. And when it comes to scanning for what makes those kind of charts expert and likely to continue, that's what I'll be teaching you in the upcoming premium event. I've got about 10 minutes left here tonight. But hopefully I'm whetting your appetite, getting you hungry for learning more, because these are the type of charts that can be really good potential successful breakouts for you. But you have to know the difference between those types of charts that are not only avoiding false breakouts, but likely to attract buyers after you get in. Let's say you bought here. Was that a good buy, or was that a bad decision or no? Well, that would have been a good buy because it's 38, now it's up a point. And we're going to see if it continues on up to new highs as well. As we look at some of these charts, you'll see that my main go-to pattern is illustrated here, and most of them is minor gap continuations. When it comes to setting your trade entries, though, and that's another topic, just briefly, there are some very specific guidelines, and you can't just use a spreadsheet approach of, add X number of cents to a high before you get in. The entry, ears should perk up now because this is important. The entry setting process is a function of how strong the prior trend was, number one. Number two, what the volume looks like on the breakout. And number three, what did the more recent leg of the run do? So if we had a big strong run up and it goes sideways, you should be deeply skeptical or cautious, unless or until, like today, ESPR took out new highs. And that was a nice, good, strong runner running from 21 to just under 24, right? So near a 3-point run in this guy today. So that's worth considering, because now the sleeping giant has awoken and did so in lots of new volume. So this is interesting to buy, not under the whole number, because that's our resistance, is going to be 24. But somewhere north of 24 would make sense for this. So oftentimes trades will give you the world's best breakout charts. I know how to trade the world's best breakout charts. That's what I do. We'll give you a second chance because the underlying momentum is so strong, right? It ran up. Like one of my picks for my members continuously for the last year and a half had been NVIDIA, and Disney before that. If you look at the daily on NVIDIA, it did a big swing. Now I stopped making calls for it back at 70 because I don't trade things over $70 a share. I mean, more power to you if you want to play around up in the sky here. My specialty is the $20 to $50, $20 to $70 share range. That's where I play. That's my caveat. My playground is that's where I trade, is that region. As a smart trader, what you're looking for are charts that have a second chance. So often, like the previous chart, you will have the uptrend, but then it went sideways. And so what do you do with that? Well, you wait for a new sign of a breakout. And we got that today in BARC, right? This is one of my picks in the live room for everybody. This thing ran 19.7 to 27. So it ran up. We saw it late. It still moved up nicely for us. Well, one of the things that you want to look for as a breakout trader is where is the next move, because it did its thing. It did a nice steady uptrend, then it went sideways. But now it's awake again. The sleeping giant's awoken, and we've got a new breakout continuation headed your way if it breaks out over the 21. If it doesn't, we stay clear. But it's awake again. It's kind of like a spark. It's been jump-started, like jump-starting a car, just like ESPR. It had been sideways, got a second chance. What you'll be learning about in the breakout scans training is how to combine all these signals. So what you'll be learning as I go through this with you next week is not only how to find great breakouts and scanning for those entries, but how to plan your scan with some professional tips that really make sense. And by that, what I mean is you want to be able to identify the nuances of which charts to avoid, because it's all in the details. We've all seen basic breakout charts. And many of us have taken stops trying to buy the new high only to see it go against us or go sideways. The answer is not, as many of my competitors would argue, using some special scanning software or some special indicator that magically, lo and behold, gets you into a winning trade. Because, you know, sorry to say the elephant in the room, but all those guys do is go back and cherry pick charts that support the sale of their indicator. You could say the Monday effect. I mean, or you could say the Jupiter, moon's in Jupiter, and the moon was in Jupiter that day, so that was good. It's flawed logic of what permeates a lot of the trading industry. I'm a former corporate statistician for the Ford Motor Company, and I'm a certified quality engineer and a UCLA graduate and a former corporate trainer. And, you know, I've got the credentials and the street smarts and the experience as a veteran trader to be able to walk you through the valid types or potentially valid types of charts that actually move, and then how to find setups that make sense with those. So, you know, as you're looking for how to find great breakouts, here's another quick tip. One of the keys to successful breakout trading is to make sure that you keep a keen eye on the range over here. What's the point range? Like ESPR, lots of reward, but also lots of potential risk. So this would not be for a newer trader. That's yet another thing you'll be learning about in breakout scans, is how to adaptively, simply match the range of the charts that you're trading to your personal experience level. Because, you know, a new trader should not be trading an instrument that went from 11 to 23. You know, I don't care how confident you are, and this is a great chart, but you might buy 24.5 and then it drops down to 17 or something. And that wouldn't be good if you're a new trader and don't know how to manage that. If you're an experienced veteran trader, then we live for these kind of charts. But you want to be able to match safely, or more potentially safely, the range, the point range, the percentage range of that chart with your personal experience level. And I haven't seen anyone in the entire trading industry talk about that, but that's vitally important, that you match volatility ranges to your personal expertise. And also, you know, just to be practical, the amount of time you've got to watch charts. You know, if you can't watch charts at least at the end of every day, or if you're a day trader during the first opening hour or so, then you may want to trade lighter volatility or thinner charts that don't have, you know, a 10-point range. If you can't watch it, you should not be trading it, you know. But something that has a steadier uptrend, like Valiant Pharmaceuticals, may make a little more sense. It went from 13 to the 17 whole number resistance. We had a bearish engulfment up here at the last part of the range there, and it found support right over 16. But anyway, this one is a nice acceleration ramp. Did this, ran up on high volume, exhausted back, did a 50% pullback, a mean reversion, and may well continue on up over the 17.25. And if it does, that's a good chart to look at. So anyway, those are the types of charts that you'll be learning about. If you want to join me for the upcoming hour and a half, we're going to these things in detail, and I'll give you a lot of actionable information. I have updated the website as we've spoken, and you can take a look at that as well. So, and again, to register, it's only $97, and it's next week. It's bargain. I used to charge $200 for my sessions, but I came down in pricing. So anyway, that is the direct link at trademastery.com to be able to look at and get involved with this. Now let me answer some questions, because a lot of questions coming in. I know I've run around pretty quickly here on these things. It's a question from Jerry: am I using proprietary scanning tools? No. He's saying, can I do what you'll be teaching about Thinkorswim or FinViz or whatever? Yeah, absolutely. Yeah, all of my teaching and training, I work with the world's top charting software. eSignal is my go-to weapon of choice, but I also work with Metastock and NinjaTrader and TradeStation, and they're all fine charting platforms too. I'm all about visual chart pattern price action trades. So what I teach can be used on any free charting too, like stockcharts.com is a great site. FinViz, also a great site. Anyway, to be able to get involved with that, I have As We've Spoken, and hey, it all turned out great. You can order now at breakoutscans.com, or that cleverly forwards over to my Trade Mastery Empire site, which all of my courses are going to be in at some point in the near future. We're working on it. But anyway, that's That's the link, trademastery.com/breakout scans. And it's only $97, and you get to work with me and ask questions. I'll stick around for up to half an hour, 45 minutes afterwards. Like I did with my previous courses, I'll always stay around and answer questions. But what you'll learn about are answers to these types of questions, and I hope that this first half hour has given you a good representative sample of the professionalism and the intelligence and the quality and the types of charts that I like to trade, at least. And now if you're somebody that only trades penny stocks, if you trade 30-cent stocks, then this might not be for you. Or if you insist on trading the Priceline, Tesla, Netflix, Amazon, over $100 stocks, you can still use the strategies, but it may take a little adapting. If, however, you're a swing trader or a day trader that trades things in, say, the $15 to $50 a share range, with a lot of the examples you can see here, 30, 40, 50 a share, 20 a share, those are the types of charts that I like to personally trade in my own capital trading accounts. I use Interactive Brokers and Fidelity, and you'll be able to learn all the advanced tips for all these things as well. So we are now open for business, and if you'd like to register for that, I'd certainly love to see. You can, people pay up to a few $100s or even over $1,000 when I do my own personal live seminars, but you can get this for just $97. No ups, no extras. It's for stocks and ETFs for swing and day trading, and you can pull up charts of your choice too. If you have charts you'd like me to pull up, at least 2 or 3 of them in the $20 to $50 a share range on good volume and volatility, I can pull those up for you as well. So the deadline to order is Wednesday, February 22nd, and the reason is our session is coming up a week from tonight, Thursday, February 23rd. So I want to be able to get all the orders in for that, because we're going to have so many people join us for this. I want to have time to get you your logins and passwords and get you registered with GoToWebinar and whatnot. So anyway, I hope I've made a good, intelligent case for why this makes sense. If you learn just one strategy on how to make one good trade, it'll be more than worth your time. And this is my latest new release for active traders around the world. And so I hope to see you in breakout scans coming up in a week from tonight. See a question. Can we be covering sectors? Yes, we also look at sectors. For example, gold and biotechs have been strong sectors today, right? We had good, strong movements in mainly in the gold sector, but we've had lots of movement lately in biotech and pharmaceuticals, like Valiant Pharmaceuticals and many others. This past week, the pharmaceutical and biotech sector, as well as gold, has been especially strong. So looking at those types of charts and then being able to identify which ones make sense is also good. One of the things I'll also be going over is how to scan for great intraday charts as well. For example, this is one that my live room members got today, UVXY. I posted the video on YouTube, so you could take a look at my calls today from Trading the Open. Anyway, how did I pick this, right? Well, one of the things is I've traded UVXY for years, so I know it like the back of my hand, but you're looking for things like bullish cut breakouts over whole numbers. And the whole number phenomenon is one thing that we cover every single day in my life, or every single Tuesday, Wednesday, Thursday that I run my live room. For example, today we got in over 20.10. My long calls back here where we go long if it gets over 20.10 and 20.3, and I had them sell at 20.9 right under this whole number resistance before this pullback occurred. That type of visual scanning for a good open range breakout at a 2-day high in an instrument like this makes perfect sense as well. So these are the type of charts that I'd encourage you to look at too. So not for swing trading, but for day trading. For swing trading, we want charts that are consistently up and consistently make sense. So yes, to answer your question, we will be looking at sectors as well as a top-down market approach so that you can learn exactly what to look for. Let's see a question. A trader is asking, is it going to save me time? Yes, that's one of the main benefits of this training, is to help you instantly evaluate what you'll be able to get out of this training by the time you're done with it. It's an hour and a half of detailed walking through the intraday and swing trading charts to help you instantly be able to evaluate the trade worthiness of any given chart. And I'll give you specific criteria and specific patterns to look for. So as you're scanning through the charts, let's say you're doing a leaderboard scan, and and signal, you control L is your friend, right? Control L, and that pulls up your leaderboard scan, and you can look at the percent gain and loss instruments in the market. Like our chart Kate today was a really nice breakout. 20 was resistance, it gapped up and ran. That's one of my calls for our traders in the live room today because of its strength. Well, like I said, the challenge with the leaderboard scan by itself is that it's very long and cumbersome, right? And even then, you're kind of left in a state of uncertainty if you're not sure what to look for. What I like to do is I will teach you how to evaluate your hot list for percent gain and loss, regardless of which. These are on every major charting software. You'll see percent gainers and loss stocks across the market. And what I want to teach you is the specifics of these kind of breakout charts that make sense to trade, and how to quickly drill down to those that have the best trade potential to work with. So anyway, it's an update on all my breakout trading strategies, and with the main focus on rapid scanning, how to quickly click through your charts and say yes, yes, no, 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 yes, no, no, which charts make sense, and how to set entries for them too, which I didn't cover tonight, but we will in the main event, so that you can evaluate where to set triggers based on the strength of the chart as well. So anyways, I hope to see you in our upcoming event. And thanks, Trader Simon saying nice 90-day flags, right? Well, thanks, Bill saying terrific professional presentation. Sounds great, wonderful, quality's good. Thanks, hey, you're welcome. So these are a question about the length of time for trading horizon. Typically, my swing trades are anywhere from 2 to 3 days up to about this length of time, around 3 weeks or so. So that is 15 trading days, which is over 20 calendar days. So typically good swing trades. In our current market, so you can let things run a little further. The reason being, and I'm glad you asked the question, in a rally market like we've had lately, the length of the trend run, sorry, losing my voice, I've been doing so many webinars for the world, the trend length run may go 20, 30, 40 days. So for that reason, you want to evaluate and find and scan for the kind of charts that make sense on a longer term horizon too. Because as long as it keeps going up, we should still be in the trade, right? Let your winners run with still tight trailing stops, and also position sizing and scaling. One of the things that I think can really help you as a professional trader or trader in training is to be able to evaluate the trade worthiness of the charts and see if you should still let it go. Still stay in the trade for a longer time horizon. So yes, we will be covering that as well. So we will be covering, if you want to keep into a trade a month and a half or two, that's okay too. There's a longer term swing trades or short position trades, but those make perfect sense in a rally continuous market like we've had ever since November 4th, right? So it's been a outstanding time to trade, and with rally strength the way it's been, if you look at, say, XIV, that's one way I like to trade the market long, is I trade XIV. If something has a trend like this and it's gone from 40 to 70, why not stay long, right? But how do you know when to exit? Here would have been one exit with the bearish engulfing and then re-entry up here. Here we have 2 red candles. If we lose support under the 62, it might make sense to get out of an XIV trade because of that. But certainly in a rally market where we've got such good sustainable trends, it does make sense to keep in a trade longer. So this will cover that as well. No, thanks. Let's see a question. Is this for both day and swings? Yes, it is for both intraday and swings. Probably will be about 70% swing trade, 30% day trading. That's kind of the coverage that I like to provide because that reflects the numbers and the types of traders that I have. It used to be more half and half, but you can ask questions about any types of charts at all. And if you have questions about day trading charts or swing trading charts or longer term trading, I'm certainly happy to help with that too, to answer your questions and get you all the answers you need coming up in just a week from tonight. Question, which criteria do I use for breakout swings? That's what we'll be covering. One of the rules, a quick rule of thumb that I've published all over the place, is a 10% range on a 15-day chart. So this one is it doubled, so it's obviously over 10%. But others like Take Two Interactive, it went say 53 to 60. That does meet my 10% criteria because it ran 7 points off its base, which is about 12, maybe 13% of a range. So a $50 stock should have at least a 5-point high-low range on a 15-day chart. Okay. Now that's something I've covered before. What I want to get at in breakout scans is how to rapidly drill down and scan through the charts easily and be able to instantly, or near instantly, at least what I do is I near instantly qualify or disqualify a chart based on its signal strength and the breakout potential. So, these are the types of things that we'll be covering in more detail as well, is what I covered today as well. So anyway, good stuff. I think that about wraps us up. Let's see. Thanks for the questions so far. Let me know if any other questions, gang. Yeah, it's great to see so many of you here. So enroll now, breakout scans, that'll forward you over to the main event for all of you watching here tonight. And if you're able to get in before February 22nd, you will get the live 90-minute webinar with Q&A coming up Thursday, February 23rd. That's a week from tonight as I broadcast this. If you're watching this as a YouTube video at some point in the future after February 23rd, you will still get the entire video download of the event in high quality 1920 by 1080 Blu-ray pixel quality WMV, super high crystal clear quality video, so you can watch it at your leisure on your on your computer, or you can copy it to your Kindle or your iPad or your cell phone or whatever you want. You can keep your video download for life and download and watch it without having to log in for some low quality streaming thing like other people have. So I like to give you guys Blu-ray quality video downloads. So another competitive advantage here, as well as learning from me, a real trader and an authority on breakout trades. So you have my word, it's very good, and it's only $97. I used to charge $200, $250 for this kind of training, but I cut the price way down in half because I got so many new traders, and I make it up on volume. I got so many of you that will be registering for this. I like to give back and make it kind of a team effort. So inexpensive, but still affordable for everybody. So anyway, you will get the 90-minute webinar with me coming up a week from tonight. Plus, you'll also get the high-quality WMV video download, and you can register now at trademastery.com/breakout scans, or you can type in breakoutscans.com to keep it easy to remember. That's why I register all these domains, is so it's ease of memory, because if you're like me, the older you get, the tougher it is to remember things, especially if it's long. So breakoutscans.com will take you to the registration page, and we're now taking orders. And so certainly hope to see all of you in that coming up in a week from tonight. So enroll now. It's your turn, breakoutscans.com, and I hope to see you there. Well, we'll go over a lot of good professional advanced tips, as well as step-by-step planning for how to scan and how to evaluate which charts make sense to trade. And with the thing is, what gets me is a lot of people in the trading industry, the educators, they try and sell these hoo-ha indicators saying consistent profit BS and all that kind of crap, and nothing could be further from the truth. As a developing trader, what I found, at least in my own experience, what you will find too, is that it's all about signal strength and getting in on the strongest breakouts that are more likely to continue up after you get into the trade, and differentiating strategically and intelligently between visually, just using visual price action and a naked chart, so I guess some people call it, but make sure you're visually looking for the strongest price action breakouts, and as you're scanning through your charts, develop a trading plan based on what you will be up to speed on, what you'll learn about once you register for breakout scans and get all my tips and strategies, a full hour and a half worth. You'll be getting that with me coming up a week from tonight. So, or if you're watching this as a YouTube video, you can get the instant download video and be watching it within 24 hours. So anyways, welcome to Breakout Scans, and I wanted to thank all of you so much for being here. And again, a big special shout out. I sincerely appreciate we're over 120 comments total that have been sent in. I need to update this. We got a lot of them in today. But thank you so much for all your kind words. It's really interesting. And we'll be going through these too during the event. And if you're all of you who are here are one of these people, you can bring questions as well. And so, once you register. So I'll be going through a lot of these as well for everybody. So anyway, hope to see you in Breakout Scans. And until next time, trade with passion. Trade with really tight stops, trade the strongest rockstar breakout charts, and make it work. So take care. We're out. Have a great rest of the week, and I will see you in breakout scans coming up a week. Thanks, Damon, saying excellent preview. Ken, thanks. You have a good evening. You too, man. Appreciate it. Hey, you too, Simon and Trey and Bill and Jerry and Carol and Mira and Ron and Bob, everybody. Great to see you all here. Take care, and best wishes for successful active trading. Bye-bye.